Hello and welcome to another update video about Ethereum. Not too much more to add here to yesterday's video. No surprise, it's Sunday, early Sunday. Until we get towards the weekly candle close, we'll probably see a bit of slow movement today, slow grinding. Again, resistance. So currently a situation, I will only focus really on the short term here at the moment, because not too much has happened here overall. So we talked about it yesterday a little bit more, extensively here. My view is currently that Ethereum topped here on the, on the 16th of April. It moved down in a wave 1, moved up in a wave 2, came down here in a third wave. That's actually quite a strong extension on the Ethereum chart. Bitcoin, I think, only reached the 1.618 extension of the third wave, and Ethereum, however, reached, I think it was the 3.3 or something. Yeah, the 3.618 perfectly down here, which is quite a strong extension of a third wave. But it would be indicative for a third wave. Yeah. Then obviously what happens now, sideways movement, sideways grind, rather suggests that a fourth wave is currently in the making. I did give you here the resistances in yesterday's video, I think the day before maybe even, between 1897 and 1976. Yeah, this is key resistance for wave 4. Above 1976 we have to, let's say, expect that something more bullish is going on. Doesn't necessarily mean that it doesn't mean it would be very bullish, but it could just be like a larger pullback, you know, a larger B wave or something above 1976. But until we break above 1976, I would assume that this is just a fourth wave. And so far, price action, shows that that is a reasonable assumption. Now, after that, we would be looking for a fifth wave to the downside. And in terms of support for that fifth wave, we've got here 1754, in my opinion, as a key level. This is the 50% Fibonacci retracement measured, of the first wave high. Very important level, relevant for such a wave A pullback. Why do I say wave A? Because this 5-wave move down at the moment that I've got charted here, for me that's an A wave of a larger ABC correction of a wave 2. And yes, an A wave can be a 3-wave move, so also we shouldn't be surprised if it suddenly starts to move in a B wave already, but primary expectation would be at the moment is a 5-wave move. Now, it's something that you can't predict really, if the A wave is going to be 5 or 3. It just means that your tactics need to incorporate both of these possibilities. But for me at the moment, it's a wave 4 that's moving up here before coming down again. Then larger B wave bounce, ideally here into this region, sort of 1980 to 2070. But that target and that resistance range is measured against the last low. If we go a little lower in the A wave, I would have to adjust that as well. And then eventually the C wave comes down into this yellow box, deeper into the box, into the area between 1754 and 1533. We will be able to calculate that in a little bit more, with more accuracy. As soon as we have an A wave complete, a B wave complete, then we can calculate the C wave target. Only below 1533, I would get more concerned about new bear market lows at the moment. It is of course on our radar, but it's nothing I would necessarily focus on or expect. Well, I don't expect it, just means I don't really focus on it too much, but it's of course there, and nobody should think that new lows aren't possible, because they are possible, like anything would be possible in markets. It's only that as long as it's following one scenario, maybe two, we don't need to be focused on, scenarios 3, 4, 5. Of course, we need to sort of have them on our radar, but new bear market lows, of course, are still possible. So from a risk management point of view, they need to be considered. Okay, that's my update about Ethereum. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.